President-elect Donald Trump's cabinet shakes up. Investors are gearing up for the new policies of this administration. Trump's nominee for Treasury Secretary, for example, Steven Mnuchin, joined me last week right here to spell out the changes that could be in store for Fannie Mae and Freddie Mac. Watch.
We've got to get Fannie and Freddie out of government ownership. It makes no sense that these are owned by the government and have been controlled by the government for as long as they have. In many cases, this displaces private lending in the mortgage markets, and we need these entities that will be safe. So let me just be clear. We'll make sure that when they're restructured, they're absolutely safe and they don't get taken over again, but we've got to get them out of government control.
When he said that, the shares of Fannie Mae spiked 50% in 2 days. Now, the stock is up 22% since Mnuchin's remarks, but getting it out of government control may not be immediate, and it's going to be tough. Joining us right now, Rafferty Capital Markets Equity Research Analyst Dick Bove with more on this. And Dick, I was reading your report on this earlier. You make the point that, look, this is not the company that it was decades ago. The earnings power is not there. Talk to us about how doable this actually is.
Well, no. Well, first, can I indicate to you why you provided a real service last week by getting Mnuchin to say these things? Because, first off, you know, by this summer, we're going to have a massive housing financial crisis again if Fannie and Freddie are not taken out of the government. And there are three reasons for it. The first one is because the companies have virtually no capital. And in fact, in their 10Qs, they're indicating that they could have negative capital in a very short period. And that's also being said by the head of the FHFA. So first, they're acknowledging that they're going to have negative capital, and that's going to create a crisis. Second, they've gone back to the policies that Cuomo and Clinton had in place, which put them into trouble in the first place. They're buying mortgages with 3% down. Down payments of only 3% down. They're putting money into trust funds, which are basically being used to fund subprime mortgages. And the third reason is because the government is tapping the revenues of these companies for the payroll tax cut and possibly for the highway trust fund. So these companies are being ripped apart by the government. They have no capital, and if the Trump administration cuts taxes, they will have massive negative, capital, and that will be a literal housing financial crisis. All right, now what happens? All right, basically it is not going to be hard to get these companies into a private sector situation because, in fact, the head of the FHFA has the right to do that, right now. Congress doesn't have to have any major debate or vote or what have you. And when Mr. Mnuchin takes control of the Treasury, he'll be able to, in essence, get a direction to put these companies into a private status. Number three, these companies are not running out of the ability to make a lot of money. The problem is no one understands what they do. These companies are no longer mortgage banks that basically buy mortgages and put them onto their portfolios. In 2012, the Treasury told them they had to stop doing that, and they have stopped doing that, and they're getting rid of that portfolio. What they are is an insurance company. They are insuring mortgages against loss for the people who ultimately own them. So the net effect is that business is growing at a rate of 20% a year. That business is likely to generate $16 billion in revenues this year versus the old mortgage banking business, which I'm telling you will be gone, which is only generating $500 million. So, yeah, these things are very attractive stocks at this point, and something does have to happen very soon.
Well, thank you for explaining that. These are difficult to understand, and I think you made it very clear cut for our viewers this morning. What I was trying to say was the fact that, and I said earnings, but really it's also the revenue that streams right into the Treasury, right? I mean, is that the issue in terms of these companies being, like, why would you invest in a company that their revenues are going into the Treasury?
Well, you wouldn't.
Right.
In other words, basically, if you thought that the United States government was going to keep these companies in their current status, the money would be going directly into the Treasury and the companies would be bankrupt, as I'm telling you, by this summer, or if a Trump tax cut is passed before then, they will be bankrupt immediately.
Right.
So the net effect is you can't have that happen because that's, 60% of the mortgages in the United States are not owned, are insured by Fannie or Freddie. And something like 70 or 80% of the mortgages in the United States are in some fashion guaranteed by the United States government. This is a nationalized industry. It is not capitalism. It is a nationalized industry, and it's the biggest industry in the United States with $12 trillion worth of mortgages outstanding. You cannot have the government running this business.
Hey, Dick, it's Robert. Nice to see you. Just a question. When they become a private institution per se, and likely a public institution, because I think a lot of shareholders would actually put capital into this. What happens to the kind of earnings strippings obligation that goes on currently to the Treasury? How do you remove that?
Well, it's very simple to remove it because basically, number one, I think it's illegal, and I think the courts are moving to the decision that would indicate that it's illegal, but you simply get rid of the senior preferred. If you get rid of the senior preferred, the Treasury has no call on any of the earnings of Fannie Mae and Freddie Mac. Number two, you get rid of these laws which say that the money being generated by Fannie Mae and Freddie Mac have got to be given to the U.S. government for general purposes like the payroll tax cut or the highway trust fund. You make them truly private companies and insurance companies that are insuring mortgages, and they're making a lot of money doing that, and they're growing at a very rapid rate doing that.
And your feeling is courts are moving that way?
I think that the claims court under Judge Sweeney has made decisions concerning the provision of discovery documents to the public, which will show pretty clearly that Judge Sweeney at least seems to believe that the government has overstepped its bounds. The net effect is, if one of the things that Mr. Mnuchin can do is he will have all of this information which the Treasury is refusing to make available to the public. When that stuff is made available to the public, and if he makes it available to the public, what is likely to be discovered is that the Obama administration lied to the public concerning the need to take all the profits of Fannie and Freddie, that they knew that these companies were going to be highly profitable, and instead of letting that high profitability go to the shareholders, grabbed it for the U.S. government.
Well, Stephen Mnuchin was real adamant that he thinks this needs to be done. Obviously, you agree there. That was a important interview. Dick, real quick, any analysis on what we're seeing in global markets today? Italy rejected the referendum. You're seeing populism take hold there in terms of pushing back on the elites. Your thoughts on markets trading up today on that?
Well, it strikes me that, if you think about the fact that we're going to bail out the Italian banks anyway, why that was tied to a constitutional referendum is hard for me to understand. There's no likelihood that the European Central Bank is going to let the Italian banks fail. There's no likelihood that the German banks are going to let the Italian banks fail. So the fact of the matter is, it's just a tempest in a teapot, in the sense that why should the Italian banks get all caught up in a constitutional referendum in Italy? They're going to be bailed out. They have to be bailed out. The European Central Bank cannot allow them not to be bailed out, and therefore that's why the markets are going up.
Interesting. Dick, great to see you as always. Thanks so much for your analysis.
Thank you.